What if I told you there was a legal way to reduce your inheritance tax bill completely within the rules and most people miss it? I'm talking about something called normal gifts out of income. Not dodgy schemes, not trusts, just good planning and an understanding of the rules. I'm Justin from AskJT. I run an accountancy firm, and this channel is all about helping small business owners make better financial decisions and avoid expensive mistakes, and hopefully grow your business a bit smarter as well. Today I'm going to dive into one of HMRC's most overlooked IHT exemptions, and it could save your family thousands down the line. So what are normal gifts out of income? What are we actually talking about here? Well, this is an exemption that allows you to make a regular gift out of your income completely free of inheritance tax as long as you follow the rules. You might have heard of the 7-year rule, but the great thing about making a gift out of income is it's going to be straight out of your estate. No waiting for 7 years. It's absolutely brilliant. But there's a big caveat with this. It has to come out of income and not capital. This means things like, pension payments, salary, rental income, dividends from shares. That they're generating your regular income, and that's where you're making your gift from. And the key thing here is that you must be able to prove that the gift hasn't actually impacted your standard of living. So in short, you're not making yourself worse off by giving the money away. There's a few tests that we've got to meet. So these are really, really important. Get your pen and paper and write these down. So number one, the first test HMRC would look at is the gift truly out of income? So you're not selling assets in order to be able to make the gift. So you're not selling up shares, you're not selling properties, you're not doing anything like that. You've just got spare cash in your bank account at the end of the month because you've had your pension payments or you've had your salary in, and you may be making a gift to a family member, like a child, for example. The second test is it must be regular. That's an interesting one as well. So it's not just a one-off gift. And think about this as kind of an annual gift is absolutely fine as long as it is regular. So it's happening every single year. Monthly payments and even actually birthday payments are absolutely fine as long as they're regular. And then the third test, is it must not reduce your normal standard of living. HMRC don't want people giving away cash they can't afford to lose ultimately. So as long as you get these 3 tests right, then you're going to kind of take that money straight out your estate immediately. No 7-year waiting list. None of this 7-year, tapering or anything like that. Now, don't go anywhere yet. What you need to understand now is actually how you execute this properly, because it does require a little bit of detail as well. So I'm going to come on to that. The common use cases where people use this is, for example, paying grandchildren's school fees, for out of pension income. Again, as long as it's not affecting your income, no problem. What about £250 a month for a child's rent, for example? Again, it's coming straight out your estate. It's a regular gift as well. Making an annual ISA contribution for adult children. Again, as long as it's not affecting your standard of living, that should be fine as well. The key part to this is it's got to be about your normal income habits and not a one-off windfall. And just recently I was having a meeting with a client and said, I've got a fact sheet about gifts out of income. And I gave her this thing and she said, oh, I can pay for my child's extension. And I was like, no, you can't do that because that's a huge lump sum payment and it's coming out of capital. It's not a small regular amount that's coming out of your regular income. So I actually said to this client, I was like, you've just heard the bits you wanted to hear. And that's the key thing about this is I've mentioned those 3 rules. You make sure you're going to do those as well. And the next part of this is about recording it. Now, HMRC love a piece of paper. They love kind of documentary evidence. And we're really good as accountants at creating this documentary evidence as well. But you as clients aren't always so great at keeping it as well. So I'm going to tell you exactly what you need to keep. What you need to do is you need to have a kind of a paper trail. basically to all of this to show that this was actually a gift out of income. Now, what we recommend doing is you fill it out like a templated letter of intention and you keep a record of it. And I've got clients doing this all of the time where they just basically they write a little note to the children saying, this is a regular gift that I'm planning on giving you each year or each month. It is a gift out of my income, and I give it without suffering any hardship. And that's wonderful because, on your death, if there was a load of you died within 7 years of that gift, HMRC might be saying, well, hang on a minute, is this a actually a gift out of income? If your children have got those bits of paper, the documentary evidence, it's fine. And even a birthday card, as long as you've kept the birthday card and that was written inside, absolutely fine as well. Now, I've got a downloadable, I mentioned the fact sheet, didn't I? A downloadable fact sheet that you can get off my website. And if you go on to askjt.co.uk, in my blog, I've got that IHT gifts out of income download. And you can just click the link and it'll take you to a PDF, basically. I'll put the link in the description for the video as well. Now, look, how is this going to fit in with your business planning? If you're a business owner or director, this is where it's going to get interesting. You might be drawing dividends out, or you're getting rental income from investment properties, or doing pension drawdowns and all of this sort of stuff. When we start getting later on in our business careers, we can suddenly start accumulating quite a lot of assets. So it's really important that you bring this in as part of your strategy. There's not many things where you can just exempt yourself from tax. And this is one of those. And it's really easy. All we have to do is just write a couple of letters or even write out a birthday card that's kept. And we just do the right planning, basically. HMRC will look at this after you're gone, basically. After you're dead. That's the reality of the matter. So this is why the paperwork absolutely matters. But look, just to summarise it, is most people, don't use this relief. They don't know it even exists. They're too scared to use it because they don't know how to do it. Go download my fact sheet. It's got some very particular wording in there about how you can do this absolutely properly. And at the end of the day, I want you to go off and keep more of the money that you've earned through the whole of your lifetime as well. Make sure your children are going to benefit from it as well. If you found this video useful, I'd be really grateful if you would like and subscribe to my channel. That would be absolutely great. Please download the fact sheet. You can find loads of useful information on my blog at askjt.co.uk/blog, or you can find my podcast. I'm on Apple and Spotify. Just search for AskJT and you should be able to find my podcast as well. Anyway, I'll see you in the next video. Thanks for listening. Bye.